everyone, welcome back to the market update featuring by Rationale and MarketsAll. This week kicked off with rising yields and the sell-off in stock prices as risk-off sentiment continues to gain momentum. Traders are betting that the Fed may not cut interest rates as quickly as expected, driven by stronger economic data and growing possibility of Donald Trump presidential victory, or maybe you can say the election uncertainty. As we mentioned last week, Trump's potential election victory might lead to better stock prices, but that uncertainty definitely bringing some risk-off sentiment. In today's video, we'll be diving into some key market updates, including how stronger than expected retail sales impacted the upcoming, could impact the Fed's decision, the current state of interest rates and market sentiment, and the resilience of equities despite high yields. At least for the last week. I also be sharing Goldman Sachs latest S&P 500 forecast and what it could mean for the short and long-term outlook. Stick around to the end, as I'll be wrapping up with some important takeaways on how to navigate these uncertain times in the markets. And let's get started. So we're kicking off with the retail sales data that have exceeded the expectations. This is promising sign for the economy, as stronger retail performance could limit any potential downward revisions to the previous non-farm payroll numbers. As you all know, in every non-farm payroll numbers, we keep receiving revisions for the previous months, and there's a metric that we keep checking, like a 2-month rolling revisions. That's pretty important. And up until last data, we were receiving downward revisions, and that was the main sign that brought us to this fast rate cut period. And that's why it's an important part, and this retail sales data might be impactful on that. And any potential, if we don't see that kind of downward revision, that's a good thing for the economy. But as you all follow, I think since August, good data, good pricing, bad data, bad pricing is intact. And while a rate cut in November is still on the table, the December decision is less certain considering this data. I don't want to say, I think it's still the base scenario is there is 25 basis point rate cut in December. But when you check, as you can see, we received the forecast was 0.5. This is US core retail sales number. That's what you see on the slide right now. And we you can see that the forecast was 0.1%, but we received 0.5. That's it's really a strong number, and really higher than the expected. It's not a little bit higher. So but I think a non-farm payroll number will be decisive on this, and that report will play a crucial role in shaping the Fed's December projections and rate decision. Because also we're gonna see if they're gonna change their outlook about 2025 and so on. Now let's talk about interest rates and market sentiment. Here you see the TLT chart. TLT is it's an ETF, iShares, 20 years plus Treasury bond ETF. It's a weekly chart, but you see here. This remember that this is, since it's a bond ETF. If this charts when yields go up, the TLT charts go down. So there's an inverse relationship due to the relationship between bond yields and bond prices. After strong retail sales, strong retail sales also with the beginning of we received that number last week, but with that we started week with high rates, which is a trend we need to watch closely. That's why I'm sharing this chart. I had also mentioned this chart in my previous video. That's how I'm following long-term yields potential movement. But beyond that, this retail sales data, we can say that geopolitical risks, upcoming election uncertainties, and a recent inflation concerns, as highlighted by the latest CPI data, could lead to a pause in downward trend of yields, and if we see that like this I don't know, yeah, if you see that where I'm showing this mouse, if this trend line holds, like I'm using this TLT chart to track long-term bond yields, it's currently at a really crucial technical level. If this trend line acts as a support, we could see a continued decline in yields. Yeah, that's what I'm saying. That's why it's pretty really crucial right now. Also, with this, like, we're really strengthening dollar index as well. But that's how I'm following. And here you see like it's actually a banking index ETF, but like despite high yields last week, equities showed really like strength last week. There are three. There are like three key reasons behind this. First of all, strong earnings expectation. Since we received like a strong guidance from banks last week, which drove this chart. This is KWB Bank Index, and as you can see, there's a really nice breakout here. Sorry, let me show you. There's a really nice ascending triangle, and with the earnings week, we saw this like move, and yeah. So that might be the first reason, strong like earnings expectation. Second one might be markets potentially pricing Trump victory. Institutional investors see Trump win is a positive for stocks and negative for bonds, unlike the scenario of Harris victory. And the third one might be broad market strength beyond Magnificent Seven. We've seen the equity rally expand to the broader S&P 500, as well as like a mid-cap and small-cap stocks. For that, you can follow Russell 2000 index. And when I'm going to show the charts, I'll touch into that. And yeah, let's now shift to the some like a long-term projections about like general market sentiment. I came across really insightful analysis in Bloomberg, John Otters from Bloomberg daily newsletter, that he discussed Goldman Sachs updated outlook. Goldman's chief US equity strategist like David Kostin raised his year-end S&P 500 forecast to 6,000 with 12-month target of 6,300. That suggests then like an 11% gain on over the next year. It's like a great for like a short-term optimism. However, Austin also warns that long-term growth may be much slower. He estimates the S&P 500 will only gain 3% per year in nominal terms and 1% in real terms over the next decade. Potentially one of the weakest performance on record. Short-term optimism has been fooled by recent like a 10% rally in S&P 500, driven by market beliefs in potential Trump victory and solid earnings season. But like Goldman also holds a slightly more positive view about the economy than the broader market for a short term. But here where it gets interesting, Goldman warns that long-term valuations are concerning. There's a CAPE ratio, which here you see in this chart, which compares current stock prices to inflation-adjusted earnings over the last 10 years. Shows that S&P is currently more expensive than it was before in a great crash of 1929, and not far from levels seen during the dot-com bubble in 2000. The key point is that the valuations adjust for the economic cycle, right? Like, I mean, when the economy is booming, when you do valuation is different. When your economy is doing really bad, if you do the valuation, is different. And this ratio is trying to adjust it. When things look rough but are expected to get better, valuations can be higher. And when things are good but might slow down, they can be lower. To get a clear picture, the CAPE ratio compares like current prices with the average earnings over the last 10 years adjusted for inflation. And like as you can see here, the like dot-com great crash, and currently we're here. the big question is like, will this time be different? Because I mean, after all this movement, we saw that huge corrections in S&P. One like key factor propping up the market seems to be ongoing like an AI boom, which has kept the market elevated despite like a historical trend suggesting a potential downturn. We'll see, but just as a bit like a long-term warning, I just wanted to share this Goldman's analysis. Like, to wrap up, I don't see this like Goldman's warning as a clear like a bear market signal, but it does align with my view that there's like a limited upside left for US equities in the long term. As John Otters like highlighted, the main concern is valuation, and that's something we can ignore. So yeah, as we head into the like next few weeks, my advice is like stay cautious and avoid temptation of FOMO, because when you see that I mean, in this kind of like markets, in every correction, I mean, yeah, corrections to like evaluating corrections is important. Technically, I'll show like technically when it's like it makes a correction, you might, I mean, you should have a plan when it's converged to short-term moving average. For example, you need to see some consolidation when it converges to a short-term moving average, and you can bet on that potential again, like a small breakouts from those turns from short-term moving averages. It's not like in every correction doesn't mean like because with FOMO, the feeling is like the investor psychology is like, oh, there's a correction, let's run, let's jump in. But that correction should be like it should be like a quality correction, you know what I mean? And that's the important part. It's easy to get caught up in like a noise in the markets currently, but the key to like success in trading, what I've learned until now, is maintaining discipline and having a solid strategy which develops with time. And like what I'll be doing is like, while having all this information, all this analysis in my pocket, but on the other pocket I'll be relying on charts, and if I see the implication of these thoughts on charts, and I'll be acting accordingly. So let me jump to a few charts that I want to mention this week. First of all, I want to start with cryptos. As you can see, Bitcoin charts here, there's a weekly cup with handle, and like this 69,500 levels is being challenged. We'll see if we're gonna see any breakout from here, and that's how I'm following this chart. When you come to the daily, as you can see, it's like maybe you can call this, when after this like a 30% move, you can call this like it might establish a short-term like a cup with handle. Maybe you can follow it like that. We need to see if this like here let me repeat that, like this black line is 21-day moving average, the red one is 200-day, and blue line is 50-day moving averages. If you're gonna see that potential return from here, but here I had mentioned this ascending triangle here, and this area might act as support, which would lead to establish a shorter term cup with handle. And yeah, I'm still optimistic like for cryptos as well. And let me switch to Ethereum. It's how I'm following in daily chart. As you can see, this like, I don't know, like a 50% downtrend, then there's like a bottom reversal formation, symmetrical triangle is formed here, 1 touch, 2 touch, 3 touch, then breakout, failed breakout. And if you're gonna see any second attempt here, my only concern is like, generally I don't like to trade, like at least I find it risky when it's like below 200-day moving averages. But yes, like maybe like if you're risking for per trade, like I don't know, like you can risk half of your regular risk per trade if you want to trade such thing. And I don't know, like being long around here with a stop, like that might be a trade idea. And you can like let it run up until this 200-day moving average and see what will be forming. Solana here, really clear, like you can call it, I don't know, also like if you just ignore here, head and shoulder bottom, but it doesn't matter, you know, like there's at least like a like bottom formation here, a breakout, pulled back, and it's moving right now.
I think this is the clearest one among like Bitcoin, Ethereum, and stuff, and Solana. And yeah, there might be like this kind of trade idea here. Cardano here also might be forming an ascending triangle chart pattern after a downtrend. Here, when if you want to play like a more like a short-term game, here another in a 4-hour chart pattern, another like ascending triangle. You can that might be another game plan, a potential breakout maybe with a stop around here, like 4% to 8, targeting 8%, 1 to 2, and that would be around the resistance level of ascending triangle chart pattern in the bigger time frame, which is daily chart. So you can first initiate your position like this, then you can sell it here, then wait for another breakout here. So that potential breakout will be a breakout above 200-day moving average, and that will be that might act as a nice trade idea. And equities, NVIDIA, I had mentioned this. If you're also following me from Twitter, I had mentioned this, how I traded this one as well. First of all, in the Rationale Trade Ideas Equities report, I had shared this NVIDIA symmetrical triangle chart pattern, and we saw a breakout, and first position might be established here. When it's symmetrical triangle chart pattern, always it's, I mean, compared to rectangle, it's more difficult to move quickly compared relative to rectangle ones, as prior highs act as resistance. And here we saw some resistance, pulled back. I mean, yeah, it's not that clear for me, but after, like, for example, after having a position here and with a tight stop, when you have this, I prefer to wait a pullback to form a like cup with handle-ish kind of stuff. But it gave actually this here, but I was expecting to see more consolidation, and it didn't give me that much confidence. It seems like a bit like a FOMO trade right now. But if you like, I don't want to say force, but here after this move, it pulled back a bit, and it's doing right now, and you can consider it maybe cup with handle, and if you take this as a breakout. But personally, I'm being a little bit I mean, being patient might be better for me. I mean, according to my style, by the way. It is definitely worth to give a shot, give it like make a bet on it with maybe, I don't know, tight stop here, being long with like this, like a 5% risking. It's not that tight actually, but depending on trade style. But yeah, I think still it's a really nice chart pattern formation. My only concern is like the risk of sentiment going on this week, and I don't know if the market in general going to support this trade idea. That's what I'm saying. And Alibaba here in the weekly chart, that's how I'm following. Like after this here, it was an ascending triangle chart pattern, huge breakout, pulling back, and I expect it to go higher. That's how I'm following Baba. Apple in the daily chart, it's a bit short term, but after this rectangle breakout, pullback, going higher, and formed here like ascending triangle-ish or cup with handle, a breakout, and it's, as you can see, this level of 233 levels is acting as support right now. And when you see, like, you can see also prices tightening. First of all, like 17% decrease, then you see that 8%, then here you can see that 5%, and yeah, breakout. It's only acted as like after this move, like if you had a stop loss here, for example, in this breakout, for example, let's say this day, 15th of October, if you had a game plan like this with a stop around here, you would still be in this position with a little bit loss right now. But as you can see, this 233 level is still acting as a solid support, at least for now. Bank of America was like for sure the part of like the part that I mentioned, this banking ETF, banking index. With that move, we saw a breakout here. Bank of America holding a huge, as far as I know, like one of the biggest bond holders in his portfolio. And that's why we might see also like this correction here is really like bonded with this, like bonds are coming down, like yields going up, that part. And if we see that narrative turns to the main trend of higher bond prices, we might see better pricing also in Bank of America. But technically, I think this was nice as well. Nice breakout, pullback, and it's currently it's around the 1.2% higher. Silver, in the higher time frame, let's say there's like a head and shoulder bottom breakout. I mean, I had mentioned this, but I want to mention again quickly. After this, like a symmetrical triangle chart pattern here, what I'm talking about. Let me this out. As you can see here, this is symmetrical triangle chart pattern. Breakout, pulled back. Look where it sees some so like a support. Then huge move. Okay, and now you can also consider this top bit handle a breakout. Look at the strength. Yeah, and also like gold, like precious metals, like we keep. I mean, I was keep mentioning in my previous videos as well. It's like still I see any correction, quality correction, might be considered as a buying opportunity. Here I want to mention a future chart. It's India like Nifty 50 index futures. As you can see after this in the monthly chart, look at this. What a move. And in a daily chart, when you come, you can see that head and shoulder reversal chart pattern after a huge uptrend. And there's a breakdown here. It might be considered as a short opportunity, like being short. Let's stop here. I think this is really good trade idea. And also another precious metals that I wanted to mention, Palladium. As you can see, there's a rectangle chart pattern is being formed if it managed to trade higher. And I mean, this is also like a commodity is used in like economy. That's why industrial commodity. That's why it acts different than gold and silver. Like if the economy does well, we can see like a better pricing. For example, if we see some appreciation in Chinese economy, I think Palladium might be impacted positively as well. And yeah, that was the last chart that I want to mention today. That's all I'm going to talk about this week. Thank you for your like patience, and thank you for your time. If you find this video helpful, if you find whatever you see here is like helpful, please subscribe, like open notifications, and give a thumbs up. Or if you have any question, please ask from like to the comment of the like video. And yeah, that's all I'm going to talk about this week. Thank you for your time. Have a great week.